Hi, everyone. Thanks for joining us again. This is Going Elliptic in our charted sessions. And today's the 8th of June, coming up like the third week in a row now where it's really hard to read the markets. There's been the massive correction. And yeah, hopefully you're joining us live. You can ask questions in the chat. We'd love to see what you're thinking and also share a little bit of how we're reading the markets through charting and other tools for analysis. Obviously, this is not investment advice. It's purely for educational purposes. But yeah, glad to have you here. And hey, Shanky.
Hey, Paul.
How you doing?
Doing well. How are you doing?
Yeah, really good. Yep. Still, absorbing as much as I can of all these different, traders and analysts that are sharing their insights. But yeah, excited to hear more about how you're reading things. And yeah, see where we think we might go next.
Yeah, 100%. It is confusing. Whenever the market is sideways and chops up and down, I think it's difficult to read in general. And I think this is one of those difficult periods for BTC and the rest of crypto, of course. So yeah, let's dig in deeper today. So instead of maybe trying to broadly cover too many, we will just spend more time on some of the fundamental ways to crack this nut, try and understand what's going on.
Great. Yeah, I'm up for fewer assets. Obviously, if anyone chimes in the comments and there's something specific they want charted, I will try to include that. But yeah, let's make sense of at least the majors and a couple of the alts to see how things are trending.
100%. Yeah, let's do that.
Great. All right, let's start with the majors and we'll bring up TradingView there. Talk us through it. What are you seeing?
Well, firstly, I think Bitcoin is not looking healthy, right? Like that's right. Very clear. Now let's see what's going on there with Bitcoin, right? Like, so one, of course, we know there's been a lot of red candles and, the various support levels have been questioned. Let's see what that means, right? So rewind a little bit when that big dip happened. And I think we had a few sessions after that, and we covered this. What we started seeing was that Bitcoin fell through some of the earlier support levels. So, there were support levels around 47,000, which had been tested a few times. And of course, I'm even ignoring anything above it. It makes no sense to look at it at the moment. And then there were a few others that we drew just basis prior price action and just looking at the market structure.
Sure.
And yeah, and so it looked like these were logical zones, right? It looked like 47,000 was a zone, 43,000 was a zone, 37, 34, 29, 23. So all these looked like valid areas of value, right? Now, just to remind our listeners, again, nothing of this is investment advice, but when you do your own research, bear 2 or 3 things in mind, which are almost fundamental to reading charts. First is, how do you find areas of value? Like what is it that determines an area as being an area of value versus not, right? And the primary way to look at it is, has that price point, and when I mean the price point, doesn't mean exactly that price point, but roughly in that zone, has it been tested a few times, right? So if we use that, and I'm going to just use the highlighter to show you. So let's just say 47, right? 47,532, where we drew the line. Why did we draw the line there? Because if you look at that price point, it's been tested a few times, right? It was tested here, it was tested here, another time here, and then of course it fell through it, just broke through, right? And even in this period when it was tested, it almost changed its role. Initially, it seemed like an area of resistance. It's difficult to break through, and then later it became almost an area of support. So, this roughly the line around 47,500 seemed like an area of value, which means that for some reason the price was either, going to use that level as either support or resistance, depending on, of course, the overall market structure, right? And so similarly, if you look at 43,000, 37, and we had drawn another one at 35, 34,241. I think looks like that moved a little bit. So no, here it is. Yeah, 34,241, 29,222, and then 23,861. Each one of these has basically a story, right? So in the past, each of these price points have either acted as areas of support or areas of resistance. And so when we look at that and just come back to this, specific price action over the last multiple days now, it looked like the price was, the market was becoming a little less volatile, and it was, sort of being capped between 43,000 and this 34,000. For the most part, the market was moving there. And then we saw in the last few days, it shrunk even further. It became tighter, where it was mostly between 37 and 34. For most part, for the majority of the day, the price of Bitcoin was between 37 and 34. So I think that definitely became a very important level. Those levels certainly became worth watching. And the obvious question obviously was, is it going above 37 and then beyond onto the 40s and more, or is it crashing down and going below 34, right? So that became an obvious question. That's a good way to kind of at least think through.
Yeah, and you had also suggested in some of our previous episodes that perhaps there would be 3 attempts at 40K. It would perhaps have that momentum to try one more time, see if it could break through, and if it did, great. And that's kind of a real breakout. If it doesn't, it's only down from here.
Correct, 100%, exactly. And if you dig in deeper, I'm going to just zoom in a little bit in this part, right? Because this is of most relevance. So if you look at this part of the chart, this is exactly what's happened. There was the first attempt immediately as soon as that big crash happened. Nothing happened there. Second attempt around here, right? Once more trying to just break through that 40K barrier. Again, sort of did not succeed, went back down, right? It pulled back. And you always see every time there's like a big surge up, there will be a bunch of red candles because obviously the buyers have lost steam, right? The buyers have either been liquidated, lost money, lost interest, don't have enough supporters, and then the sellers come in, right, and find the new price point. And then there was the next push here, which is the third push. And at this point in time, we saw again a massive red pullback. And what this is really saying very, very, very clearly is that at least as the charts are, right, without trying to look at anything else outside these charts, there isn't really as much buying momentum or buying support, right? Despite all the crypto Twitter and everybody else saying, hey, this is going back to the moon and people drawing fictitious charts. All that is great, but, and I'm not even saying that may not be true, but the fact is if you just look at price action, if you purely look at data, there's absolutely zero evidence for it. There is no evidence that there is an immense amount of buying energy that is building up or buying momentum that's building up, right?
Yeah, and the volume tells the same story. We can see almost every green bar is shorter than a red bar. So volume of selling is outpacing the volume of buying.
100%. And also the fact that the bars are becoming lesser and lesser, which means just in general, the activity is reducing. Most people are just not even interested, right? Which also means people are just waiting and watching. They don't know. Is the market bullish? Is the market really bearish? Is it going to crash and burn? Is it going to go back up, right? 60K and 100K and beyond. It seems like majority of the market is just unsure what's going on. And this unsurety of the market is what is, I think, causing the volume to drop. People are just staying away, right? Instead of trying to jump in, they're saying, well, let's just stay put and read this first, right? So I think that's what's really going on, if you ask me. Now, there are a couple of pieces that I had mentioned. I think we discussed it last time when we were doing this session about a week back, is that this price point 34,241 is going to become a very important price point, or at least that area will become a very important area of value. And the reason I think it'll become very valuable is because if you look at these, right, like, so we saw this crash all the way down. It was a long wick. It did not really close all the way down here, right? It pulled back up. The buyers stepped in, and the market definitely closed on May 19, the big dip day, upwards of 35,000, closer to 36,684, right? So the market closed there. And then in the following candles as well, even if this line was breached, 34,241, it just never closed below 34,241. Thereby 34,241 and roughly this area became a very strong support level. Like every time the price would go down below this, the reality was there were enough buyers who would feel like, no, this is too cheap. Let me go buy the dip, right? That was basically what was happening. And so then somebody would buy it, and they would just leave this wick behind, essentially a bunch of people who had sold, but there wasn't enough support for the price to fall down, and the price closed way above this. So if you see here, it's very clear. The price, even since the fall, the price never closed below 34,241 until
yesterday. Yep.
Right, a few hours back, and now it has breached this. So this makes me think, have we lost that area of support? Right now, we won't know that for sure. Okay, so again, it wouldn't be correct way to assess it and generally jump to conclusion. But the important thing is that now this has become a very important area of value. I think something to watch for. My sense is the next 2-3 candles, if it sort of hovers around here or struggles to go back up in this zone, right, and keeps closing below this or keeps at least getting pushed down further below this, it probably wouldn't hold. And why it wouldn't hold is simple sort of market mechanics, right? There just aren't enough buyers to keep it at that price point, and the red candle fellows are going to take over, right? So then I think there is no surprise that you would start seeing then it fall down to the next level of support. Of course, it could close somewhere in the middle, but usually the way market behaves is it tends to go and follow, respect certain levels, because for whatever reason, those levels end up becoming places where people have traded in the past or found some area of value around it, right? So there's a good chance that one would go down to either this 29,222, or maybe if there's a sudden crash and burn, one shouldn't be surprised if it tests all the way down to this 23,861 level. Now, again, another thing that I want to mention here is a lot of people ask this question. In fact, some people have asked this also in the show, and I've seen a lot of discussion around this in Twitter as well, around, hey, how important are these levels or areas of support and resistance? What significance does it have, right? Now, one has to understand this, that a lot of this trade, especially in the BTC world, is leverage trade. A lot of people are trading derivatives, perpetuals, margin trades, and basically taking positions long and short. And if you think about it, a lot of these traders, whether algorithmic or discretionary individual traders, a lot of them are relying on technical analysis to enter into certain positions and exit their positions, right? So that's a strategy that a lot of people use, which means that a lot of people may have their stop loss sitting around these areas as well. So I'm pretty sure anybody who's gone long probably also has stop loss sitting somewhere little below this 34,241, because anybody who's going long thinks obviously the price is going up, like people have been drawing all those curves, which means they're not expecting the price to go all the way down to 23 or something. They're expecting the price to remain somewhere here, and probably have put maybe 1 ATR or something like that, a stop loss below this. Right.
Sure.
And if you were to put like 1 or 2 ATRs below this, you're somewhere in this zone between 29,222 and 34,241. And once the market crashes, like once the price comes in, what is going to happen is that the stop loss would get triggered. Right. And when the stop losses get triggered en masse, that leads to more selling, because suddenly now all these orders which were waiting, right, for the trigger price to come in, the trigger price has been achieved. And suddenly now there is more selling pressure. So often that's what happens. It's like the levee breaks, if you may. The dam is broken, and once the pressure builds in, it'll take with it a bunch of other things, right? So that's something to watch out for. Is that going to happen, or does it pull back? If it pulls back, of course, none of that will get realized, because none of those sort of safety nets, if you may, will get tested, right? So
yeah, and can that happen in reverse? So say everybody's got large short positions now.
Right.
Can we see 1 or 2 ATRs distance from the current price that it would then kind of shoot upwards? Or is that less likely?
Yeah, no, same both ways, right? So both ways it can happen, but remember this, the difference is the distance from the next area of value. So
Sure.
what I think is, if somebody's gone short here, right? If somebody's gone short here, they are probably a few ATRs up here. Maybe their stop loss is sitting somewhere here, right? 36K, or maybe some a little more conservative folks may have even given it some more breathing room, right? Like maybe 38K or even 40K, who knows, right? Depending on what your risk-taking appetite is. Now, if somebody has gone short and put a ATR right here, like just a stop loss right here, that's super risky anyway, because the market, even when it's way down, could just sort of bob up and down and just liquidate you, right? So you don't want that. You've probably given it some breathing room. But the fact is that for something to take it, now it can happen. You're 100% right. It can happen. But remember that the energy required to take that off is from here. Let me draw this line. So maybe it's worth looking at this. Let's just take this brush maybe. So it's like from here all the way it'll have to go up here, right? So it has to cover this much distance at least to even liquidate the first set, right?
Yep.
Whereas if it goes the other way around, right? Other way around, it has to probably go only this far. It has to go here and it'll start liquidating some of them, right? So look at the distance, right? The length, the amount of buying that has to be done to liquidate, it's possible, is way more than amount of selling you have to do to liquidate when the market is heading down, right? So
Makes sense. Yep.
yeah, so just that's the mechanics of the trend, right? Now, again, all of this is not hard science. I want to just put it out there because who knows, sentiments change quickly. People can change their positions. People might just close their shorts, right? People might get over aggressive, over bullish on short positions and then may not give this much breathing room, right? People make all kinds of interesting and funny choices, right? So all that is possible, right? In which case this would not be true, right? But something to bear in mind, this does have a role to play, is all I'm saying. People don't look at it from that standpoint. People just feel like, yeah, there's a price point and there's just buyers and sellers acting rationally at all times. But there are so many other factors now in this sophisticated trading world that come into play, and they can come and impact in ways that one would have not originally thought of.
Yeah, and you touched on a key point there around kind of the sentiment or the thesis and when different traders might change that. And this kind of third week into a correction, I'd have to assume the majority are kind of questioning every one of the indicators or sentiment that they're relying on in their trading decisions. So are there some other indicators perhaps that are being commonly talked about that are kind of giving people a little bit more insight into how some of the other traders who care about the same indicator might be reacting to things?
Yeah, totally. So again, indicate, and you made a great point here. A lot of this is sentiment, right? And everybody's trying to make sense of which sentiment is the correct sentiment, if you may, what to rally behind, right? Yeah, so I think there are a few indicators which have at least proven useful in the past, and I think it's worthwhile to look at those for sure. First and foremost, just more psychologically, I think the important one that's coming soon, I think we mentioned this last week, is the death cross. The death cross per se may not have like that much of an impact on the price because the price is already bearish. But what may happen is it'll just be another confirmation point. And when that happens, if people are already in the bearish mood, it's like another news that you don't want to hear. It just brings you down, right? So I think that sentiment definitely it'll impact. We saw that with the 20 and 50. So if I add another one here, and I should just show that so people can see what I'm talking about. So if I go to, if I go to this, the 20 EMA, and personally, I think 20, 50, 200 make a nice 3 EMA sets. Of course, people have their own favorites, 21 day and 30 day and what have you. And, there's no right and wrong to it. But I just feel like 20 day allows for a nice short cycle, right? Roughly a month window, 50 days, roughly a couple of months. And 200 is almost a year, right? So it shows kind of trends, right? Because MA's moving averages in general are very good to just map out trends, right? And so if you look at it, 20, anything above 20 basically shows strong uptrend, right? So all of this is above 20. It's like a strong uptrend, super good, right? All of this was happening with Bitcoin through its journey. And we saw this 20 go below 50, which essentially means this was the turning point when the big dip happened, where it got questioned. So at this point in time, it was not bearish yet, but the question was, while it doesn't look like the strong trend is still there because it's not above 20 EMA anymore, the price action is now falling below that moving average, right? And so basically it's becoming more bearish more recently, right? The most recent prices that we see, the most recent candles that we see are net negative, right? Or net red.
Yep.
But this still does not tell you more of a death cross. All the people can use this golden cross and death cross with any two EMAs, right? But in my opinion, there's not really a death cross. All it's saying is weakening of trend, right? But the same thing when it'll happen with this 50 and the 200, that becomes of major consequence. And the reason it becomes a major consequence is because 200 EMA is supposed to be a major indicator for long-term trend. So anything that goes below 200 EMA, right? And it is right now, by the way, below that, I think, right? Where are we there? So 20 you take out. This is your 200. Is this 200? Yeah. So this is the 50. We already saw price, was below 50 for a bit. And below 50 for a bit essentially means that it's getting a little more bearish. And we add one more 200, it certainly meant that it was getting quite bearish, right? Like at this point in time, it's confirmed bearish territory. Of course, it could rebound. Bitcoin has all these sudden movements, so anything can happen. But it was certainly in like a very bearish territory here, right? It's below 200. And once the 50 EMA crosses the 200, then it's kind of a confirmation saying that, yeah, the season has changed, right? Basically, that's what moving average is saying. Anyway, so that I think is one indicator. The other one that the Bitcoin world likes, and it has been used quite effectively. In fact, there are two of them, and I'll look at it super quick. One is something called the pi cycle top. So the pi cycle top is not usually a super common indicator in the normal fiat world. It is it's an invention from within the Bitcoin world, like many others, right? We've also seen stock to flow type of things modified for Bitcoin. We've also seen the power law corridor type of things, which we have touched upon in the past. And pi cycle top is also another of those, which has worked very well in the Bitcoin world. Now, without getting into all these formulas, all it's doing is it's basically looking at two different moving averages and then bases those moving averages movement with respect to each other or crossover or cross under. It tries to determine, has the top for the market been reached, right? Like, are we done with the top for this cycle? That's all it does. So there are a few indicators here, right? A few people have put it. I'm going to just look for this pi cycle top. So pi cycle, yeah, there you go. I get it. So I'll go with this one. This one seems enough people have used it. And it says, well, cycle top was done on 12th of April, according to this one. Usually it's within 3 days. So in the past, it has always been accurate to 3 days, which means it's correct. 14th April was the actual top so far, which was that exact day that Coinbase direct listing happened or went public. And this one, according to this indicator, pi cycle top was reached on 13th of April, actually. So it was just 1 day off.
Yeah, and is this indicator useful in other timeframes other than the daily, or?
This one is a daily indicator. This is something that is built on a daily 111-day and daily 150-day moving averages, and it doubles basically the 350-day number value and then takes the ratio, which is why the pi. It's basically 111 by 350, which is roughly about pi, and at 3.15, not exactly pi, but roughly. So if you look at it, look at this. Even the last pi cycle top, the last time it did in 2017, it predicted very accurately this pi cycle top. It has
but
been
none
accurate.
Of the tops in between, I guess.
Not in between, but the total cycle top, it seems to somehow accurately do it, or at least it has done a couple of times. Okay, doesn't mean again with any indicator, it's not the law. Doesn't mean that it will always be respected, but it has something to bear in mind, right? So if you're a believer in these kinds of indicators, well, according to this, the top is done, right? And so now probably it's retracement time, according to this. Okay, I'm not saying that this is necessarily accurate, but according to this. The last one that I want to quickly see, and then we can maybe quickly touch upon ETH and a few others, is the moving average, and that is a 50-week moving average. So I'm going to move this to a weekly. This is another favorite indicator. And let's look at the 50-week, right? So this has now become weekly because when you adjust in TradingView the time frame, it adjusts for the corresponding time frame. So now it's become EMA for 50 weeks and 200 weeks, right? So this 50 is now drawing the 50-week EMA. And on the 50-week EMA, we are very close to it. We are kissing this 50-week EMA line, with this red almost having touched it. And on 19th, we kind of, just sort of pierce through it, right? Now, what we have seen in the past, if you go back here, every time it goes below the 50-week EMA, that's the kind of end of the bull run, right? So,
right. Yep.
yeah, and you can go back and, people can see for themselves, but, 50-week, this is where, see, 2017, 18 came, 2018, once it went down, we went into the bearish territory market. Now, doesn't mean it always stays above. By the way, this does not mean the 50-week is not saying every time it's under the 50, it's bearish, and every time above it's bullish. That's not what this is saying. What it's saying is after a bull run, once it breaches below the 50-week EMA, 50-week EMA, usually that's the end of the trend, right? And we're very close to it. Doesn't really confirm that yet. So if you look at the 50-week EMA, it's not saying that there is bearish territory yet. It's just saying it's very close to it's being tested, right? And if it bounces off this,
right.
that's great. The trend is hopefully maintained again. But if it doesn't, then that according to this indicator, it's done, right? So wait for the next bull cycle. So that's at least what this indicator is saying. Okay, I think that's all as far as there are many more indicators. Maybe we can cover that in follow-up tweets, or perhaps also in a newsletter. We still have a few versions of those that we have written up, but we need to complete and publish, and maybe we should add it there.
Yeah, no, definitely. If you're watching us on YouTube, please also follow along on Twitter at Going Elliptic and subscribe to our Substack. And yeah, we do share more content there, so we hope you enjoy it. So thank you. That's quite an in-depth look then at kind of Bitcoin. How about Ethereum? Is it really following the same trend, or are we still seeing some decorrelation or uncertainty from the market in relation to the two?
Yeah, well, firstly, and I'd love to hear your viewpoint also, there seems to be a lot more divide between the ETH believers and the BTC believers of late, right? And we like to rather stay mostly neutral and stay objective. But for the most part, I think I could not disagree. I mean, there's a lot more happening on ETH, right? BTC's narrative is a little more, I would say, narrower and restricted. And in fact, the thing that they had to celebrate off late was it becoming a legal tender in El Salvador, which is a good thing, but it's a small puny little economy. No offense or anything, but I'm just saying the impact of it is questionable. I don't know if purely, again, from an economic analysis or a financial analysis standpoint, does it really impact it? It's like, not really, right?
Yeah, I would have thought that, Japan, kind of accepting Bitcoin as legal tender under their regulation back in late 2016 perhaps gave it more legitimacy and more of a boost than El Salvador doing anything now. So yeah, I kind of feel like that's a non-event and certainly shouldn't move the price of Bitcoin. Whereas compare that with a week or two ago, where some of the European Union bonds were being issued on Ethereum. I'm like, okay, great. That's a much bigger size of activity, of economic value that can come onto the Ethereum network.
Oh, yeah, totally. So I think you're right. Firstly, I think the slight difference is Japan made it like legal payment currency or something to that tune, right, within the financials. These guys have officially made it legal tender, which means the public debt can also be settled in it, right? There's a small technicality. Yeah. But you're right, the economy is so small. In fact, I would say MicroStrategy buying probably has larger impact than El Salvador making it legal tender. And again, no offense to that country. I'm sure they're doing well, and it'll be helpful to them and other people who rally behind it. That is not my point here. But I'm just saying, just in terms of pure value, the amount of buying power, right?
Yeah.
MicroStrategy is taking a $400 million loan or convertible debt instrument to go and buy Bitcoin, right? And they've already done that for worth about $1 billion. El Salvador's whole economy is less than $100 billion, right? Which is now, in fact, lesser than many companies' market cap. And so the amount of spare money that they're going to just put into buying Bitcoin is we don't know, right? Like, I don't know how that would pan out. Anyway, leaving that aside, let me ask you something before you look at the chart. Where do you think ETH is headed? What's your thought there?
Yeah, I still think that there is more buying demand for ETH. I don't think we've bottomed out. And yeah, there's also that growing sentiment that, yeah, Ethereum 2 is still coming, and that there's other economic activity within the DeFi space that should value ETH higher than what it has been. Even, that sentiment that it should be higher than its previous all-time high at 4K. So I think that as long as it's still there, puts ETH in a slightly different position from that sentiment perspective.
Completely. Yeah, I think you're absolutely right there. Also, from a chart standpoint, it's not as bearish yet. It's still hovering around 50 EMA, right? And so you could say the trend has been weakened, but it's still not completely turned bearish. There is a lot more going on with all the other things you mentioned and the upcoming EIP 1559 and so many other things. Maybe a DeFi, a version 2 of DeFi Summers, for all you know, and that might propel the growth here. So yeah, so I would watch it. I would still remain bullish on ETH. There's also a good chance that ETH actually goes back to 5K, because 5K was a number that everyone was looking at when the bull run started. And it's possible it might go there. Now, we don't have any indication yet. Let me be very clear on that. Nothing here in the price action or the last few days says that, hey, ETH is actually breaking out and becoming, instrument that is going to go regain and retake 4,200 and then eventually go to 5K. But things outside of this chart are sort of telling that story, right? Now, of course, we have to see how it translates into the chart. What this chart is really saying is that, yeah, it's not, the trend is weakened, but not completely broken. The other small thing I want to touch upon here is just the relative strength, right? So if you start looking at ETH to BTC, ETH seems to be doing really well there, right? And this is, trending nice and strong. I would think it's probably above the 20 EMA also. Let's see, is this still super strong between the two? Yeah, there you go. So it's even above the 20 EMA, right? So ETH is doing really well relative to BTC. Doesn't mean ETH by itself is doing well compared to the dollar or any other reference point, right? It has also been shaken up a bit, but it's definitely doing far superior to BTC at this point. I'm just purely from price action, right? Nothing more than that.
Yeah, and it's then also quite interesting because, the standard logic is if Bitcoin's down, all the rest of the crypto's down, or at least the other large caps, and maybe people are going into micro cap or smaller alts. But yeah, that logic doesn't have to remain true forever. And it's, at a time like this where the market's so uncertain, is potentially the opportunity to rewrite that assumption. And there's certainly, a lot of people out there, I think, that would like to see, whether you call it flippening or just reducing the dominance of Bitcoin, but there may be enough of pressure there to weaken the dominance that Bitcoin has over Ethereum. Only way to find that out is going to be to look back in another month or two's time, or even a year's time, and see how it played out. But it will be interesting if this is the point where it changes that narrative.
Yeah, I think you're spot on there. In fact, if you look at a collective set, right, like all these that have ridden the DeFi wave, I would say they're already moving very close to flippening. So not just ETH, but if you said, let's look at all the DeFi centric stories, combine that with ETH and see what is the overall market cap or momentum or energy, I think that is probably already flippened or close to flippening, right? Like they're very close to that mark, right? And the question is, does ETH alone take it? And do others also follow that, right? And so maybe it's worthwhile to spend a couple of minutes on the usual challenges, BNB and Solana, right? There are, of course, a whole bunch. We may not have the time today, but let's just look at it. And the interesting thing is, if you look at BNB, forget the price points. If you just look at the chart, right? BNB, I'll take you back to ETH. They don't look very different. They both are moving between this 50 and 200, hugging the 50, trying to stay there. If you go back to BNB, it's sort of a similar story. Of course, BNB pulled back much more because it's a little more volatile. But right now, again, it's trying to stay above 50 and, just play the same game. So it's very correlated. In fact, BNB and ETH seem to be highly correlated at this point in time.
Yeah, I couldn't see any advantage of holding one over the other except for the network that you're transacting on. So yeah, if you're doing DeFi on Smart Chain, then great, hold some BNB. But otherwise, for everyone that's on Ethereum, there's kind of no need to.
Exactly. Yeah, you're right. You're right. Very similar. And yeah, unless you're on that network, there's really not much of a difference in terms of exact usage or impact. Now, if you go to Solana broke through 50 and in fact went back and recaptured its previous area of support around 47, but then it found resistance there. It couldn't hold it for too long, and again it's pulled back a little bit. But this one actually has done well. Like some of the alts that were still sort of moving away from Bitcoin and ETH and shooting up, right? Matic was one of them. Looks like Solana was another one like that.
Yeah, it's definitely captured a new kind of reference price point comparative to the other assets. So if we were, say, charting ETH to Solana or ETH to Matic, they are trying to claim a larger amount of the value that's there relative to Ethereum and relative to Bitcoin. So this is what I'd see as part of that reallocation of capital. Perhaps some people who are overseeing larger amounts are kind of going, okay, where do we want to allocate that? Where's probably the assets that either have more room to grow or are more likely to have a narrative that talks to growth over the coming year. If the whole market's down, which asset's going to be the least bearish?
Yes, that's correct. No, absolutely. Also, I think when it comes to Solana or BNB or ETH, and of course some of the DeFi coins, right? The more DeFi specific ones, the yield farming type and the collateralization centric, right? Whether you look at Maker or you look at Aave or a bunch of those other ones. I also feel that from an institutional money standpoint, it's easier to assess the value. I think for a long time, institutions have struggled to figure out how do we price things like Bitcoin. It's not like they necessarily dislike it or like it. It's just an enigma. It's a little bit of a mystery, right? And despite all the narratives around the fact, hey, it's a hedge against inflation, well, it's not really played out that way always, right? And in fact, I think there's an analyst at Goldman Sachs who made this point, who I think has made a very valid point. He said, yes, it's a hedge against inflation, but not like gold. It is more like copper and other commodities. And why so is because, yes, it hedges in some cases, but also tends to go volatile sometimes, right? So it's not like it's always predictably hedgeable. For that matter, there's a case that even gold hasn't always worked. Traditionally it's been looked at as a hedge, but it's not like it always works every time, right, against inflation. Of course, if you're in a hyperinflationary economy, like Argentina faced or Venezuela was facing or Zimbabwe, sure, then anything works. Because anything that can hold value is better than that currency, right? So, and that's how also there was a great demand for black market for dollars and stuff like that in those countries. But leaving that aside, if you're looking at just broader markets, right, like for an institution, we're not talking about individuals who are getting marginalized. Unfortunately, that's true. But institutional money that is coming in, I think they feel, in my opinion, a lot more home with valuing DeFi or valuing these networks, because in their minds, it looks a lot more like a tech stock valuation or a banking valuation or a fintech valuation, right? Like they could use that similar lens to see, okay, what is the network growth? How much, is the total value locked? How much is moving through it? What are the yield curves like? Right. And then they're able to come in and play a little bit more from their own math, right? And say, okay, if I do so much in traditional finance, right, I can go and allocate so much on, ETH, or I can go and, maybe go invest behind Aave or something. We haven't seen that in a big way, but I wouldn't be surprised if in the next 18-24 months, you'll start seeing institutions not only taking position in ETH that we have heard of a little bit, but even coming and, let's say, buying, okay, I want to go and take a position in Aave, or I will go buy something in Maker. I'm not saying these specific coins, I don't know, right? But I'm saying that those kinds of coins could become attractive to them, the DeFi sector at large.
And what would also be interesting was if that's a direct, say, OTC or large volume trade into those respective tokens. They might not even hold any Bitcoin or Ethereum, but take a large position specifically in a small number of tokens that represent those protocols that they can understand and they can easily value. And yeah, that would be a really interesting kind of maturation point for the market. Might not be as great for, kind of the buying pressure on, say, Ethereum, but certainly it helps with the usage and the value that's locked on the network.
Oh yeah, totally. I think I'm with you on that. So we'll see how it evolves. I mean, my sense is over this rest of this year, of course, we'll see week by week, and we're going to analyze it every week. But rest of the year, we'll see this interesting story unfold, where on one side you'll start seeing a little bit more fundamental analysis and investment, and then the craziness will continue, right? You'll keep seeing Dogecoins, and you'll keep seeing Cardano's way ahead of its even launch, right? Being valued, like priced in 10 years fast forward. I don't know what they're pricing in, right? But things like those, right? So you will see these happening on one thread, and then there'll be some more which will start becoming a little bit more realistic. But it'll be fun to watch. I think we'll keep watching that week on week, and try and figure it out from there.
Yeah, no, it's definitely exciting. In fact, just because it's perhaps no longer a bull market doesn't make it any less exciting. And yeah, definitely we want to hear from you in the community. So yeah, if you're watching, leave a comment on YouTube or in the chat, or tweet at us, tell us more of what you'd like to see, and any predictions that you have as well of where things might be heading. Yeah, this is educational content so that we can all kind of move forward together. Thanks for that, Shanky. That was yeah, really insightful, and yeah, even the Pi cycle top and a few of those other indicators hopefully prepare us for what might still be another volatile week ahead.
That's correct. We'll keep an eye out on it, and we'll keep providing our updates. Another session, of course, a week out, but tweets and other updates. So for our listeners, yes, this is educational content. Ask us questions. We want to be helpful, and we want to provide and give you tools so you can objectively look at it, right? Like, it's great to play the memes and sentiments and emotions, but there is a place to being objective and analytical when it comes to playing with your money. So might as well use it, right?
Totally.
Yeah.
Great. Well, thanks everyone. Thanks, Shanky, and we'll see you next time.
Perfect. Thank you, Paul.
Cheers.